Welcome back everybody into another early bird setup review. This morning, as always, we're going to have a look at the setups that we see on a daily basis on our favorite pair, which is gold, and trying to understand the price action and what is actually the best trade setups to trade on, what are the conditions in order to replicate them on a daily basis during our New York scalping sessions. So as you can see now, we're starting at 154, and we're going to a little bit different than the last ones. I'm going to understand what it might be helpful during a live trading session, because yes, seeing it's another block, then it's a retest of the key level, then yada yada yada, might look good, might look easy, perfect break and retest, but doing live trading, it's very important to understand, okay, if I want to take in trend lower time frame trades, if I want to take clean and retest or end of pullback, TP. Yeah, if these are the rules, then what I really want to study and focus on is, of course, the usual one is, will it go to 30 pips or not? Is it a clean price action or not? Is it in trend or time frame or not? But yes, during the actual live session, is it in trend? Is it to counter on high time frame? This is clean break and retest or end of pullback. So these are all the questions that during the live trading session come up to my mind. So oftentimes they make me like sort of double guess and sometimes also miss opportunities because I am in a double bias. So let's start and let's get into it. So starting of course from the left hand side of the so let me just grab this so that I don't miss it. Starting of course from the left hand side, we are clearly seeing a bullish price action. As you can see, price is breaking, retesting these previous highs. Then we have the breakout of 2000. So now we wanted to see this bearish entry. We're not looking also only at the, we might look also at the bullish one. So let's start from the beginning. Of course, it's after 220, so that's volume in the chart. We have the first break and retest, and then we have another break and retest of these previous highs. So it's very interesting to notice that so we are in a bullish price action because we are making higher highs and higher lows. So we are in a bullish trend. We can identify that this is a clean and strong breakout of our 1997 key level, and it's a breakout of these previous highs. So after identifying that the breakout is clean, it's strong because it's really evident on the chart. This now what we want to see is we don't want to enter, for example, straight away at this candle close, which even though it is the retest of the level, we are not at this time, we didn't see any clean and strong breakout. So we want to wait. We see this breakout and we wait for the confirmation. So any entry that will be either this candle close or after the multiple retests of these previous highs, you can see how the price action is actually retesting exactly the same wick, the same top wick, and failing to close below the key level. So you see that not a single candle closes below the key level, anywhere here would be a good entry in anticipation of the continuation bullish. Should I be scared about the continuation bullish? No, because the setup is sound. So we are in a clean bullish uptrend, and we are seeing a breakout. The break and retest is happening at a relevant PSA, which is the key level, matching also the PSA, the most recent price sensitivity areas, which is based on the market structure, so the previous highs. Any entry would be good. If the price goes down and stops you out, it's fine. We might take then the continuation, or we might consider that the price action is going to be bearish. But here, that's the first entry, because it's clearly in trend, it's a clean break and retest, and we place the 30dp. Is it in trend? Yes. Is it a counter trend on a high time frame? No. Is it a clean? Yes. So that's all these are very good checkpoints for this price action. So then we have our first profit, because of course this candle, this movement goes to around 30 pips, and we might, if we want, consider taking another entry. But okay, here in this case we are seeing what looks like a very nice and clean break and retest of the next key level, 2000, but this would be very risky, because for example in this case we don't see, it is missing a strong breakout of this level and the retest of the level. So it is in trend, yes, but is it a break and retest of a relevant PSA? No. So unless you entered very aggressively over there, that's not really an entry, especially because these candles are reacting simply at these previous ones, are not reacting at any highs like it was doing here. So I would say it a little bit risky to enter unless there's some fundamental confirmation. You might see, okay, yeah, the price made a low, and with some momentum, if it's gaining momentum, I will enter over there when it breaks above the key level. It will be profitable, but nothing is stopping that from reacting again over here and then coming back down, retesting these previous highs, and then the continuation bullish. So in this case, I don't really like it as setup. It would be more of intuition setup, but anyway, it will be in trend. So for example, now we are looking at the next leg. So up until here, we are still in a very bullish bias. We are seeing a breakout of our PSA, and as you can see here, first we don't have much of a breakout. It's not really strong, and I say that because of, if you look at all these wicks left on the top, there is not like a very strong, you don't see strength in the chart like these candles. So it might still be a little bit sketchy, and it will be difficult to enter, especially because the price action is closing, all the candles are closing below the PPL. So maybe you enter over there, you see the retest, but look at here. If you don't see anything on the right hand side, if you look over here, it's not really strong as this price action. It's not like, oh, I'm very convinced that the price will continue bullish, because you have 3 candles leaving a top wick at the PPL, a strong engulfing bearish candle, another bullish one that left a huge top wick, then a bullish one with an engulfing, and then the bearish one closing at the PSA. My best entry, just in anticipation, would be at this bearish candle close, which will be at 2003.22. The stop loss 15 pips will be at 2001.7, I would say. So that will still be safe, because yeah, that will still be safe, because this one reacted at 2002 flat, which is 12 pips. So you still have 3 pips. It would be very risky, but still will go. and the price will stay and then go to 2006, which would not even be 30 pips. So that would be simply very sketchy price action. Nonetheless, price is making higher highs and higher lows, so it is not that bad. I mean, you might expect that the price will bounce from there and go to your TP, but still, let me do the line. Like this and like this. That will possibly be the best entry. I will not then fight anywhere this range for a simple reason. You can see how many bearish candles are in this time compared to this time frame where you didn't have any. You have like 3 bearish candles and then a continuation bullish, a strong bullish candle and some minor bearish ones. In this time you have many bearish candles, and I want to highlight them. You can see the number and the strength of the bearish candles, how they are engulfing the bullish ones, and also the volume is dying down. The direction is so slow now because also we are approaching the new 4 hour, but the volume is dying down and there is not direction anymore. So that's when you might start to think about the shift in bias, especially due to this reason, especially due to the how many bearish candles are coming back into the charts at 2005, and you might, that's what we want to see. Is it possible that you actually want to change the bias? Okay, so we see we are at a new okay, so yeah, this is after New York Stock Exchange opens. So we see a very strong and aggressive bearish move breaking below the 4 hour PSA. It's breaking below the 4 hour PSA and it's breaking below the last lower high. So this was last bullish higher low. Like this. Okay. No, actually. Okie dokie. Yeah, it's better like this. Okay. So now what we want to see, okay, is this bearish trend, bearish trade, bearish opportunity like here? It's in trend, it's a clean break and retest. So is it in trend or is it to counter trend? So these are the questions we want to ask ourselves. So what the best answer is directly in the chart. So this bearish movement broke below the last bullish higher low. It broke very aggressively and then went to retest. So the first candle, bullish candle, did not give us any opportunity to enter at these previous lows. It was not that clean, but we are retesting the 4 hour PSA, which gave us multiple rejection, multiple taps of the PSA. So when we see this candle, that's when it actually can be the end of pullback. It might also be like a 50% retracement or 60% retracement of this last move that made a new lower low. So for example, this is new lower low. Possible new lower high. So this can be the entry in anticipation. It is counter trend, yes, because we can see that on the high time frame we can identify that, okay, this is probably or either this one, or even the start of the price action, this can still be 50% retracement, so price might continue bullish, or even 60% retracement anywhere like at these key levels. But yeah, on the lower time frame, if we only want to look at in trend, it is starting to be in trend. Is of course the higher risk, high reward entry, where the lower risk after that will be with the break and retest of this 2000, and we're going to see next if it's going to do this price action. But for sure, it is in trend. It is to counter trend, might be, but still, what we can identify is that if we enter over there, we enter at a candle confirmation, it's at around 2002.5, and we want to target 99.5, which gets tapped over here. It's risky. It's risky for a single reason, because this entry, so if the entry was exactly at the new 4-hour candle, that would be absolutely fine, because probably you had 30 pips to down here. This entry is a little bit risky because you are expecting price to break below the last PSA in order to go to your TP. So your anticipation is that the price will continue down, will break below this strong PSA in order to be your trade to be profitable. As I said, the entry over here, even if the price would bounce from there, the last PSA, and in this case, price will just be a pullback for down, a continuation bullish, that would be your profit on a scalp. But since we are entering over there, it's quite risky because we are expecting at least price to not to tap the key level, but to tap the previous PSA lows. So that's quite riskier, but still makes sense. So in this case, this trade for me, it is in trend the lower time frame, yes, possibly. But yes, this is for sure a clean break and retest. It's very strong. We are doing volume time, and it's a very clean break and retest end of pullback mostly of the 4-hour candle. So like this. So let's save this one, and let's see if the next one is actually a continuation of this one, or it's okay. And let's see if the price can give us some further the price can give us some further price action below 2000. Okay, so as you can see here, that's exactly what I was saying. We are getting very lucky that the price is actually tapping our PSA over there, our PP, what's the word? Our TP, because as you can see, this in such a strong bullish uptrend that is coming down from down over there, we might be at a very relevant retracement PSA level, which can be over here and then extended, or over here and then extended. So as you can see, price actually reacted exactly at these previous lows, as I said. So we are lucky that the price actually went down and made a lower wick before bouncing from 2000. If it is like something like this, or it actually simply bounced at this key level, then continue up, our TP would have not been it, and that would be a loss. So as I was saying, we are in a very strong bullish price action. We have to watch on the left hand side, and this is the price action at a very relevant PSA. It's a very sensitive area, so that's where we are seeing exactly this reaction. So let's talk about this in trend on the lower time frame, because now right about after a few seconds ago we were very bearish, no? Because we saw this breakout, we saw this reaction. So now what are we looking at? Do we want to change our bias or what? If we want to stick to a simple lower time frame analysis in trend on the lower time frame, in this case we have to make a very hard understanding and try to avoid being double biased. So we are still validating this order block as a distribution area. So this distribution just supply area slash sell side liquidity accumulation. And we are validating because on the lower time frame we are making lower lows, lower low, lower high, and even though it might seem a strong reaction, this is a new lower low. So I will not like this trade if we are only focusing on the lower time frame, because we are buying in a strong bearish downtrend, and yes, it will go back to the previous PSA, but look also, you are buying at a single candle confirmation after 1, 2, 3, 4, 5, 6, 7, 8 bearish candles that are giving you that are showing you a strong bearish movement after an accumulation above the 4-hour PSA. We are actually breaking below now the 4-hour PSA. So what I would love to, okay, let's see it from market structure perspective. Let's do it like here. So for example, so we have been seeing a bullish uptrend, and then we start to see consolidation, and we in a consolidation, and when the price actually breaks below, that's when we can say that the price is going into a bearish lower time frame price action. So here, what are the relevant PSAs that are that we want to see for either validating a buy or still staying in a sell liquidity? So yes, we bounce from there, but I would love to see the last lower high, which is this one, to be broken for it to be a buy, possible continuation bullish, therefore validating this whole bullish movement, retracement, and then continuation bullish. Otherwise, if we see this strong bounce from there, then I'm expecting price that can possibly on the lower time frame still make a new or same lower high and then go down to make a new lower low. So in this case, that's the continuation, and that's how we could validate. So this PSA, this area is very relevant, very important. So of course, this is the last lower high, and now we are at this PSA. We are afterwards New York Stock Exchange open. We are in a very big volume time. What we want to see is either this strong rejection. So now it is actually time to pick a side. It's simply time to pick a side, and my main thing is that, okay, if I'm seeing this candle closing as it is, I'm very prone to take a sell, compared to if this candle flips and breaks above. If it breaks above, then I will wait for a retest and then the continuation bullish. if it breaks like this, I would love to see at the very next candle not at least breaking below the PPL before then continuing into making a new lower low. So that's sort of the duality between of the biases, because it gets quite difficult to pick a side, especially if you are debating between lower time frame and high time frame. And for this, I know that we don't have I don't have the next I don't have any picture from that, but we can go on TradingView on the 1st of May. And we can see how, as you can see, the price reacted at this time. We had the first candle closing exactly at the 4-hour PSA, and that's the following candle. So an entry with 15 pips and 30 pips stop loss, 30 pips TP to go to the down bill to the previous lows. Even a candle over here, because the entry would have been at the 2003. Yeah, 2002.5, 2.6. Yeah, that would be very, very sketchy, because the entry would be very low. Yeah, but still would be a 15 pips stop loss safe, and then a continuation to the previous lows. And so, as I was saying, this would be a win down and breaking below these lows afterwards. So let's continue with another trade. Still, we want to see what is the market structure that can give us a confirm of do we want to go for buy, or do we want to go for sells? What do we want to do? So let's see, we're coming from the during New York. There was some big news. Okay, we see a bounce from this level, and then we see a start of the price action. So maybe over here we are in a little bit of a mess, because we don't know what is the bias during all this time. Because as you can see, the price action is quite mixed. But we have a bounce from the key level over here with a very nice retest, and the very first kind of price action confirmation is telling us that we have a chance of going bullish. Is that now price is, look at the size and the number of bullish candles that start to print over here. So as you can see here, okay, you have the top of the key level, and then you have this price action. You have a clean breakout of these previous highs. This was the last lower high, which could be in yellow. Okay, now we're anticipating a new higher low, and that's due to the fact that we are breaking and retesting this previous PSA, and we are in 1, 2, 3, 4, 5 bullish candle. We had a top and a first rejection, but we have this candle, bearish candle, closing exactly at the PPL, and even if that would be the best entry, validating all these buy side liquidity, especially also down to from these lows. And we are taking now a buy in a time where on the lower time frame the price action is, the candles are showing you a clear bullish price action. So this would be the entry. Stop loss will be down here, and yeah, you have a tap, another tap of the PSA, and then the price will continue up. You might also have further continuation above this PPL, but if you're in this trade, it just makes sense to wait. So after you see we're still in a very bullish price action. What is the price sensitivity area that you don't want to see broken in order for the trend to still be bullish? Ideally, you don't want this price action, this PPL, this last higher low to be broken. So when you see that even with this aggressive retracement at the new 4-hour candle, this price sensitivity areas is not being broken, these previous highs, you can see how also on the details how these previous lows were not broken, how exactly the price action is, and you can see that if this higher low is not broken, then we can still be on a bullish side. So you can clearly see that we are in a sort of creating order block, sort of accumulation of buy side orders. And the best entry for me would be when we see a clear candle break and retest of this order block. So how do we know that this is not going to be an accumulation, distribution, and then a continuation bearish? We don't know. So what we don't want to take a buy over here just based on anticipation and hope. We might want to take a buy over here because the price is now breaking above the order block, and then with strong bullish momentum we see a clean breakout and the retest with a single candle. But if you are still in a doubt because you see this rejection, you are afraid of this rejection, either your first scalp is just up to that level and it's still a 10-15 pips scalp, and or you leave your scalp running, but you can see that the price is giving you another chance, and you are not to be afraid about this price action because we are still in a bullish price action until we break below this. Now this is the last higher low, so until we break either below this order block highs or below this order higher low, we are still in a bullish trend. So in this case we are reacting again at the order block highs and same PSA, and still again of new higher low at order block highs. So you also have further entry opportunity, and when you see that the price is clearly giving you bullish confirm, that's your further entries. You also might have this candle opportunity above these previous highs. You have a clean break and retest, still doesn't go to 30 pips, but still gives you a nice price action. So then what we want to see, okay, because this trade setup is about this sell over there, how do we get there? So sort of like the previous one, what we see is that at 1990 we start to see a shift in market sentiment. How do we identify it? Price is not able to make new higher highs, and even though it's not making new lower lows, we are still we are seeing multiple bearish candles engulfing the bullish ones. You can see how many bearish candles are in this time frame compared to the bullish ones, and you can see how all the candles, bullish or bearish, are leaving top wicks, lower wicks, and everything, because there's no clear price action yet. When do we start to shift into a bearish bias? It's not over there, unless this was a clean and strong price area. We want to see the candle breaking below the last higher lows for us to turn into a bearish one. So for example, we have a clean breakout. Yes, we have a huge bullish price action over here, possible reaction points. We see at New York Stock Exchange opening, we have this strong candle reacting and like being 20 pips in size, which is quite weird. Still, we maintain ourselves into making new lower highs and lower lows. So on the lower time frame, this could be a sell area, sell point, because we are retesting this previous PSA. But also, I would love to only stick to the buy side. And okay, let's wait. What are the market structure point of the bullish uptrend? So the market structure points are of this bullish uptrend. So for example, this is most likely to be a 75% retracement, and it's actually this very important higher low. And that's where we see exhaustion from sellers and a jump into buys. We could have taken this buy up to there, even less, and that would be still, of course, would be counter trend for the lower time frame, but still not even that much, because we're talking about we were in a bullish uptrend like 40 minutes ago. So I would prefer to take these buys, but we cannot avoid to consider that, okay, this bearish price action actually made a new lower time frame, lower low, because it broke this previous PSA. Yes, it didn't break the high time frame market structure, yes, but still we might bet in anticipation of that, because we know how price on gold reacts. It's a range pair. It's not like very trendy, and we can then see that this is a perfect retracement of these previous highs, 61% retracement for the continuation bearish exactly at the 10 a.m. candle. But yeah, I will prefer to honestly to stick with the bullish bias at this relevant PSA and understand that this was the same higher low that was expected for us, and this price action confirmed with the bearish candles slowing down, leaving lower wicks, and also getting smaller and getting engulfed by bullish ones can be proper bullish trades. And again, if you don't want to enter over there, because I will not like to enter over there, this candle, this price action can actually be the best one, because okay, now price is making a new higher low, and that's where we can possibly have the continuation bullish anywhere. But also yeah, even this sell side trade is actually reasonable. But okay, so I would say that this is it for this video, guys, because it's already been quite long, and especially looking at each trade on a sort of market structure perspective, of course, takes longer. So I hope you guys enjoyed, and I will see you in the next video.